We'll be first revising the concept of all three leverages, that is degree of operating leverage, degree of financial leverage, and degree of combined leverage, and then we'll be solving some questions of ICAI. We started with understanding degree of operating leverage, and we understood it measures operating risk. And what is operating risk is nothing but fixed cost. So higher the fixed cost, higher will be degree of operating leverage. If a fixed cost is zero, degree of operating leverage will not be zero. Degree of operating leverage 1 basically means there is no degree of operating leverage. So if fixed cost is 0, degree of operating leverage will be 1. What are the formulas by which you can find out degree of operating leverage? And in previous session we have derived all the formulas, so we can just directly write down in this session degree of operating leverage is the contribution upon EBIT, or degree of operating leverage is percentage change in EBIT. Please understand, you cannot write down change in EBIT. It should be percentage change in EBIT divided by percentage change in contribution. This formula we have derived from our understanding. This will go in denominator, this will go in numerator once we do the concept of percentage change. Instead of percentage change of contribution, I can also write down percentage change in sales. What is the reason? Percentage change in contribution will be exactly equal to percentage change in sales. Why? Variable cost is dependent upon sales. So sales will increase, variable cost will increase, contribution will increase by same percentage. So if sales is increasing by 10%, your variable cost will increase by 10% and your contribution will increase by 10%. So percentage change in contribution is equal to percentage change in sales. You can use these three formulas for finding out degree of operating leverage. Second concept that we learned was a degree of financial leverage. Again, it is measurement of risk. So practically it measures fixed cost, which is interest. So what does it mean? Higher the interest, higher will be degree of financial leverage. If interest is 0, then a degree of financial leverage will be equal to 1. What degree of financial leverage 1 means? There is no financial leverage. How to find out answer of DFL was also very simple. We start with EBIT divided by EBT. First formula. Second formula, degree of financial leverage, percentage change in EBT or EBIT? EBT. The denominator will become numerator. Percentage change in EBIT. Now, instead of percentage change in EBT, we can write down percentage change in EAT, because percentage change in EBT will be equal to percentage change in EAT upon percentage change in EBIT. You may also write down percentage change in EPS divided by percentage change in EBIT. Why? Percentage change in EBT is equal to percentage change in EAT is equal to percentage change in EPS. Also, what does degree of operating leverage 2 means? If my EBIT increases 1 time, my EBT will increase 2 times, or my EAT will increase 2 times, or my EPS will increase 2 times. What does DOL2 means? If my sales, if my EBIT decreases 10%, if my EBIT decreases 10%, my EBT will decrease by 20%, EAT will decrease by 20%, and EPS will decrease by 20%. That is understanding of DOL. Third concept that we have learned is the degree of combined leverage. Degree of combined leverage measures operating risk as well as financial risk. What is the formula for finding out degree of combined leverage? It starts with contribution, it ends with EBT. or DCL can also be written as a percentage change in EBT divided by percentage change in contribution. In numerator, instead of percentage change in EBT, you can write down percentage change in EAT, because we know percentage change in EBT is equal to percentage change in EAT. Instead of percentage change in contribution, you can write down percentage change in sales, because we also know percentage change in contribution is equal to percentage change in sales. Or in numerator, you can write down percentage change in EPS. In denominator, you may write down percentage change in contribution or percentage change in sales. What does degree of combined leverage of I means? This practically means if sales increases one time, my EPS will increase 5 times. Or if sales decrease by 10%, EPS or EBT or EAT will decrease by 50%. This is basic understanding of DOL, which measures operating risk, DFL, which measures financial risk, and DCL, which measures combined risk. So if there is this profitability statement, sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT minus interest is equal to EBT. How to find out the degree of operating leverage? Very simple. Degree of operating leverage is contribution upon EBIT. Degree of operating leverage. How to find out degree of financial leverage? It is EBIT upon EBT. EBIT upon EBT is degree of financial leverage. How to find out degree of combined leverage? It is contribution divided by EBT. And thus, a chart can give you a good idea or a shortcut way of understanding formulas for leverages. Let us, after understanding the concept of leverage, let us go to some of the questions and we'll solve the easy questions. Normally questions in leverage will be easy because the concept itself is extremely easy. I'm not saying it is not important. It is very important to find out risk for your operating risk and financial risk of your company. But the calculation is easy as far as this leverage concept is concerned. Let us go to C 3.5. A company has the sales of rupees 100 lakhs. Variable cost is 55% of sales and fixed cost is 6 lakhs. The capital structure of the company is equity 120 lakhs and 8% debt of 80 lakhs. Required. Calculate company's operating, financial and combined leverage. These all questions are asked in examination. Even if it is very static, we'll solve it because it is a basic question. If the sales amount is increased by 12%, by what percentage EBIT will increase? And here we will use the concept of leverage. Let us first solve first question, that is operating, financial and combined leverage. Rupees, I am writing it in lakhs, so my question will become easy. Sales is 100 lakhs minus variable cost is 55%. So 55. Contribution will be 45. Fixed cost is 6 lakhs minus fixed cost 6 lakhs. This will be 39, which is EBIT. Capital structure of the company is equity is 8% debt of 80 lakhs. So what will be interest? 80 lakhs multiplied by 8%. That is 6.4 lakhs. What will be answer? 39 minus 6.4 32.6 is nothing but EBT. What they want us to find out? Operating leverage. Operating leverage will be contribution divided by EBIT. Degree of operating leverage, contribution upon EBIT. Contribution is 45, EBIT is 39. What will be degree of financial leverage? It is EBIT upon EBT. EBIT is 39, EBT is 32.6. Degree of combined leverage, I can do degree of operating leverage multiplied by degree of financial leverage, or I can do contribution divided by EBT, which is 45 divided by 32.6. Let me find out all the answers. 45 divided by 39, 1.1538. 39 divided by 32.6. 1.20 approximately. 45 divided by 32.6. 1.38. I have found out all three answers: degree of operating leverage, degree of financial leverage, degree of combined leverage. Second question is important. If the sales amount is increased by 12%, by what percentage, not EPS, EBIT will increase? I don't want answer. I want from one of the student, tell me which degree of leverage will be important in finding out the second answer. If the sales amount is increased by 12%, by what percentage EBIT will increase? Which leverage will be helpful to us? Can anyone tell me? Operating leverage, correct. What does operating leverage suggest? If sales increases by 12%, EBIT will increase by 12 multiplied by degree of operating leverage, because it is showing the relationship between sales and EBIT, 1.1538. So my EBIT will increase by 12 multiplied by 1.1538, 13.85%. Please understand, if I am writing down examination, I will answer what is given, what is asked in the question. What is asked in the question? If the sales amount is increased by 12%, by what percentage EBIT will increase? I have found out the answer. Percentage increase in EBIT will be 13.85%. That's it. We don't need to prove it. Even if it is given in suggested, we need not prove it. Don't increase your sales by 12% and see what is the effect of EBIT and verify whether your answer is correct or not. You should be confident enough to understand that your answer will be correct. If the sales increases by 12%, EBIT will increase by 13.85%. In classroom, we can solve this. Classroom, we are not having any problem, but in examination, you should not do it. So I will have to feed the current data. 100 lakhs, 55 lakhs variable cost. Sales is 100. Variable cost margin is 55% and contribution margin is 45%. Fixed cost is 6. Financial fixed cost is 6.4. It is 6.4. Okay, it is coming 6.4. Tax rate and number of shares are not important in this case. You can see degree of operating leverage, degree of financial leverage, and degree of combined leverage. Let me increase the sales by 12%. If I increase the sales by 12%, let us understand what is happening. If this becomes 112, my sales is increasing by 12%. See how much my EBIT is increasing. This is EBIT. My EBIT is increasing 13.85%. Is it 13.85%? The answer is yes. Once again, understand, you don't need to prove this in your examination. If this is your question, by what percentage EBIT will increase, you can just end your answer over here at 13.85%. Let us go to next question, which is C 3.8. Shareholders fund equity share capital is 25 lakhs. Reserves and surplus is 5 lakhs. Non-current liability that are 12% debentures are 50 lakhs. Current liabilities are so and so, and total assets are 100 lakhs. Variable cost is 60% of sales. Fixed cost excluding interest is 20 lakhs. So it is fixed cost. Total asset turnover ratio is 5 times. Income tax rate is 25%. So understand, this is new for us. Total asset turnover ratio. Why? Just because we have not done financial ratio analysis. Once we do financial ratio analysis, this will be very simple. Fixed cost, prepare income statement. Will not be doing this because this is the part of, let us also do this. Prepare income statement, calculate and comment on operating leverage, financial leverage, and combined leverage. So we'll be doing it also, and we'll be commenting also on this all three leverages. Try to understand what is the total asset turnover ratio. It is the sales divided by total assets. Sir, what is this? What is the importance of total asset turnover ratio? We are going to do financial ratio analysis. In that chapter, we are going to learn it. Right now, I have just written formula so that we can solve the question. What is my sales? I don't know. But I know what is total asset turnover ratio. It is 5 times. Sales, we don't know. Divided by total assets, we are knowing. Total assets is 100 lakhs. Solving this equation, sales will be 500 lakhs, and that is required from this particular equation. So sales is 500 lakhs minus variable cost is 60% of sales, that is 300 lakhs. Contribution will be 200 lakhs. This is nothing but profitability statement or income statement. Fixed cost excluding interest is 20 lakhs. So EBT will be 180 lakhs. Interest, I can find out 12% into 50 lakhs. So that will be 6 lakhs. 50 lakhs multiplied by 12%. This will be interest. 174 lakhs will be EBT minus taxation of 25%. Takes us 25%. So 174 into 25%. 43.5. 174 minus 43.5, 130.5 is EAT. I am having number of shares also, which are 2,50,000. In lakhs, it is 2.5. This answer is also in lakhs. So EPS will be 130.5 divided by 2.5. This is 52.2. So I have prepared an income statement where I can know the income per share even. What is else required? Operating leverage, financial leverage, combined leverage. Degree of operating leverage is equal to contribution upon EBIT. Degree of financial leverage is equal to EBIT upon EBT. Degree of combined leverage is equal to contribution upon. I will be getting all three answers and I think risk is very minimal. 200 divided by 180, that is 1.1. 180 divided by 174, it is 1.03. Degree of combined leverage will be multiplication of both this, or 200 divided by 174, 1.15. Now those are very easy questions of degree of financial leverage. Let us not go into detail. Only new point was total asset turnover ratio. That also becomes extremely easy once you do financial ratio analysis. Let us go to next question, which is this 3.12. Following information has been provided by ABC Private Limited. Sales 80 lakhs, variable cost 46 lakhs, fixed cost 6,50,000, 11% borrowed capital, equity capital and retained earnings. What is the firm's return on investment? So they are asking us R. This we have done in capital structure, not in leverage. Does it have a favorable leverage? Trading on equity. So the question is of capital structure. Is the firm belongs to an industry whose asset turnover is 3? Does it have a high or low asset average? This is from financial ratio analysis, but we'll be solving it in this question also. If the sales drop to 60 lakhs, what will be new EBIT? This I can use the concept of leverage. I can solve it even without concept of leverage. At what level of sales will EBT of the firm be equal to 0? Sir, we need to find out financial break-even point. No, financial break-even point is EAT is equal to 0 or EPS is equal to 0. They want us the level of sales at which EBT will be 0. You can use concept of leverage. You may not use concept of leverage and directly find out the answer. Let me first draw our profitability statement. Starting with sales 80 lakhs rupees minus variable cost 46 lakhs rupees. This will be contribution 34 lakh rupees minus fixed cost 6,50,000. 34 minus 6.5, 27,50,000 will be nothing but EBIT minus interest. It is 50 lakhs into 11%, 5,50,000. EBT will be 20 lakhs. What is the firm's return on investment? R is equal to EBIT upon capital employed. R always considers operating profit and not total profit. It will consider this profit. What is EBIT? 27,50,000. What is total capital employed? Equity, reserves, preference, debentures, long-term loan, those all are capital. Total capital is this. Borrowed capital, equity capital, retained earnings. So total is it is 110 lakhs. Multiplied by 100 will be my R. 27.5 lakhs divided by 110 lakhs, which is 25%. I have answered my first question. Second one. Does it have a favorable financial leverage? First, let me find out financial leverage. Financial leverage is nothing but EBIT upon EBT. EBIT 27,50,000 divided by EBT is 22 lakhs. What is the answer? 27.5 divided by 22, which is 1.25. But understand, in the question this is not asked. What is asked in the question is, does it have a favorable financial leverage? Does it have a favorable risk? How we find out the trading on equity? If R is greater than KD, is it true? Yes, R is the 25%, is greater than 11%. There is favorable leverage. In that, we were writing favorable leverage because at that point of time we had understood only financial leverage. We were not talking about operating leverage. If R is greater than KD, there is a favorable financial leverage. What we have learned in capital structure, if you are having a favorable financial leverage, increase the debt proportion in your capital structure, your EPS will be comparatively higher and your MPS so will be comparatively higher. Third one. Third is related to financial ratio analysis. So if you don't understand, it is all right. If the firm belongs to an industry whose asset turnover is 3, does it have a high or low asset average? Let me find out asset turnover for this company. Asset turnover ratio. Any turnover ratio can be found out by this. It is a sales divided by for which you want to find out a turnover. What is sales in this case is 80 lakhs. What are total asset is not given. But understand, if I assume there are no short-term liabilities, your liability side and asset side of balance sheet is the same. Suppose this is your balance sheet. Your asset side and liability side is same. We know liability side total is 110 lakhs. So asset side total will also be 110 lakhs and I am assuming assets are 110. 80 divided by 110, which is 0.72. Please understand, asset turnover for this company is 0.72, but it is working in an industry. So similar type of company, asset turnover is 3. So for this company, as compared to industry average, asset turnover is lower. What answer I'll be writing down? As compared to industry average, asset turnover is lower. This is question number 3. Let me go to 4. If the sales drop to 60 lakhs, What will be new EBIT? Of course, we can use a degree of operating leverage and find out the answer. But here I feel that we should actually solve it rather than first finding out percentage. See, percentage is not asked. What is asked? What will be new EBIT? I can directly draw a profitability statement. If the sales instead of 80 lakhs is 60 lakhs minus variable cost will be proportionate. What was the percentage of variable cost? 46 divided by 80. Or you can do this. If 80 lakhs rupees is sales, 46 lakhs is variable cost. If 60 lakhs rupees is sales, how much will be variable cost? $34.5. Contribution will be 25 lakh 50,000 minus interest, minus fixed cost. Fixed cost does not change. It will remain 6 lakh 50,000 and my new EBIT will be 19 lakhs. So if the sales is reduced to 60 lakhs, my new EBIT will be 19 lakhs. I have just found out the answer. Anyone who is having problem in this, they can find out first variable cost ratio. What is variable cost ratio is 46 divided by 80 multiplied by 100. 46 divided by 80 multiplied by 100. Which is 57.5%. Now you can do this. 60 lakh multiplied by 57.5%. You will be getting same answer, which is 34 lakh 50,000 of variable cost. Then the answer is very simple. Fifth, at what level of sales will the EBT of the firm be equal to 0? Here also I am not using the concept of leverage. I am directly finding out the answer. What they want us to find out? Level of sales at which EBT is 0. Let me just first fill this up. Variable cost. This will be contribution minus fixed cost. This will be EBIT minus interest. I know some of the figures, like fixed cost is 6,50,000. EBIT is, interest is 5,50,000. And EBT answer should be 0. So EBIT, let us go in a bottom-up approach. EBT is 0, interest is 5,50,000, so EBIT should be 5,50,000. EBIT is 5,50,000 and fixed cost is 6,50,000, so this should be 12 lakhs. If contribution is 12 lakhs, we know variable cost ratio, right? It is 57.5%. This is 100%. So what will be contribution margin ratio? 100 minus 57.5, which is 42.5%. You can just cross multiply and get the answer of sales. What will be answer of sales is 42.5, will be 12 lakhs into 100 divided by 42.5, which is 28 lakh 23,529. At this level of sales, my EBT will be 0. I have not used concept of leverage. I have just used normal working and found out this answer. Those who are wondering how this 57.5 came, it is nothing but variable cost ratio. What is variable cost? Variable cost divided by sales into 100. What is variable cost? 46 lakh upon 80 lakh multiplied by 100. 46 divided by 80 multiplied by 100 is 57.5%. And we know contribution ratio is 100 minus variable cost ratio. So contribution ratio will be 42.5%. And we will get answer of this, answer number 5 also. This will give you 10 marks. Let us go to next one. 3.17. The following data have been extracted from the books of LM Limited. Sales 100 lakhs, interest payable per annum 10 lakhs, operating leverage 1.2 and combined leverage is 2.16. You are required to calculate financial leverage, fixed cost and PV ratio. PV ratio is contribution margin ratio. We can just write down profitability statement. Sales 100 lakhs minus variable cost we don't know. So contribution also we don't know. Minus fixed cost we don't know. So we are not having answer of EBIT minus interest. This we are knowing. Interest payable is 10 lakhs rupees. Rupees are in lakhs. And we don't know EBIT. Alright. We have written all the figures which are available. What is operating leverage? 1.2. What is combined leverage? 2.16. I will get answer of financial leverage easily. How? Degree of combined leverage is equal to degree of operating leverage multiplied by degree of financial leverage. Degree of combined leverage is 2.16. Degree of operating leverage is 1.2. So I'll get DFL. DFL will be is equal to 2.16 divided by 1.2, which is 1.8. So I got degree of financial leverage. Now I am having interest. Understand? If you are having this figure, you can use something like this. EBIT divided by EBT is degree of financial leverage. Degree of financial leverage is equal to EBIT upon EBT. Now, neither EBIT is available nor EBT is available. But you know the logic. It ultimately measures interest and interest figure is available. We will be able to solve it. Degree of financial leverage is 1.8. I am writing EBIT as it is. See how I am writing EBT. EBT is equal to EBIT minus interest. So instead of EBT, I am writing EBIT minus interest. Why I tell you, in an equation, if there is only one variable, it can be easily found out. Here, now only one variable will remain, which will be EBIT. EBIT, because I know interest is 10 lakhs. I can solve this taking EBIT as X, 1.8 is equal to X upon X minus 10 lakhs. So it will be 1.8 X minus 10. Answer is in lakhs. Is equal to X. This is 1.8 X minus 18 is equal to X. 0.8 X is equal to 18. X is equal to 18 divided by 0.8. 22.5 lakhs is X is nothing but EBIT. 22 lakh 50,000 is EBIT. EBIT is 22.5. Now I can find out all the answers. 22.5 minus 10 will be 12.5. You can even verify whether your DFL is correct or not, or your answers are correct or not. 22.5 divided by 12.5. 1.8 should be degree of financial leverage. It is degree of financial leverage. Alright. Now we can easily use DOL to find out contribution answer, because we are having EBIT. What is DOL? contribution upon value of DOL is 1.2. Contribution I am not knowing, but EBT I am knowing, which is 22.5 lakhs. Contribution will be 22.5 multiplied by 1.2, 27 lakhs. Contribution is 27 lakhs. And so I can find out even fixed cost, which is 27 minus 22.5, which is 4.5. I can even get variable cost, which is 100 minus 27, 73. I have got financial leverage, I have got fixed cost. I want PV ratio. PV ratio is very simple. PV ratio is equal to contribution divided by sales into 100. Contribution is 27, sales is 100, multiplied by 100 is 27%. I have got all three answers. You will be getting again 5 marks. .19. The following data is available for Stone Limited. Sales is given, variable cost 40% is given, contribution 3 lakhs, fixed cost 2 lakhs, EBIT is 1 lakh, interest is 25,000 and profit before tax is 75,000. So our work is very much less. Using the concept of leverage, find out. Very easy. Percentage change in taxable income if EBIT increases by 10%. Percentage change in EBIT if sales increases by 10%. Percentage change in taxable income if sales increases by 10%. Also verify the results. Now if you want to verify the results, it will be a long question. So only it is of 10 marks. But you should get 10 out of 10 in this. Let us first find out the degree of operating leverage. Degree of operating leverage will be 3 lakh divided by 1 lakh is 3. Is a degree of operating leverage. Degree of financial leverage 1 lakh divided by 75,000. Which is 1.33. Degree of financial leverage. EBIT divided by EBT. Degree of combined leverage will be 3 multiplied by 1.33, which is 3.99. Or 4. We can do this. 3 lakh divided by 75,000. Degree of combined leverage is 4. We have got all three leverages. In examination, you will have to present it properly. Find out all, write down all the three formulas and find out all three answers. Let us solve the questions one by one. Number 1. Percentage change in taxable income. Taxable income is EBT. So they want us a percentage change in EBT if EBIT increases by 10%. If EBIT increases by 10%. Any student give me fast answer which leverage I can use to find out. I don't want answer. I want which leverage will be important in finding out percentage change in EBT if percentage change in EBIT is given. It will be financial leverage. What is degree of a financial leverage is 1.33. We have already found out. What does this mean? If EBIT increases by 10%, then EBT will increase, but not by 10%, by 10 into 1.33. 1.33 into 10, which is 13.3%. EBT will increase by 13.3 percentage. This is our first answer, but they want also verification. So you will have to give the proof that EBT will increase by 13.3%. Let me do this. What was previous EBIT? 1 lakh. Current EBIT is 1 lakh minus interest is 25,000, and so EBT is 75,000. Now you will have to prove. So if EBIT increases by 10%, what EBIT will become? It will become 1,10,000. 25,000. This will be 85,000. So EBT from 75,000 will become 85,000. EBT from 75,000 will become 85,000. How much it has increased? 10,000. What was the base? 75,000 multiplied by 100. This is nothing but percentage increase in EBT, which should be 13.3%. Let us find out. 10,000 divided by 75,000 multiplied by 100, which is 13.3%. See, we have verified even our answer, right? This is what is asked in the question. If it was not asked in the question, I would never have written that. But this was asked in the question. Number 1. Number 2. The percentage change in EBIT if the sales increases by 10%. So what is the second case? If sales increases by 10% and degree of operating leverage is 3, then EBIT will increase, number 1, by 10 into 3 percentage, that is 30%, right? Also they are telling us to prove. We will prove it. First let us write down current situation. Sales is 5 lakhs minus variable cost is 40%, 2 lakh. Contribution is 3 lakhs minus fixed cost is 2 lakh, and so EBIT is 1 lakh. If sales increases by 10%, how much sales I will have to keep? 5,50,000. Sales increases by 10%. Variable cost is 40% of sales. So new variable cost will be 5,50,000 into 40%. 2,20,000. See, are you getting it? Even variable cost is increasing by 10%. This will be 3,30,000, which will be also increasing 10%. This all increase are always same. But fixed cost remains same, 2 lakhs. So new EBIT will be 1,30,000. What is the percentage change in EBIT? First, let me find out the change. What is the change? 30,000. This is termed as change. What is percentage change? 30,000 divided by 1 lakh multiplied by 100, which is 30%. This is the proof that our answer is correct, right? And this we were proving in an explanation, we are proving it in Excel sheet, but in examination you will have to prove it in this manner. Number 3, the percentage change in taxable income, which is EBT, if sales increases by 10%. Number 3, if sales increases by 10%, then EBT will increase by, which leverage should be used? The degree of combined leverage. EBT will increase by 10 into degree of combined leverage is 4. Will increase by 40%. If the sales increases by 10%, we already know EBIT, right? This is the thing. If sales increases by 10%, current situation, proposed situation, I am not rewriting it because up till EBIT I have already calculated 1 lakh and 1,30,000. Minus interest. Interest remains same in any case, which is 25,000. So EBT first was 75,000. Now it will become 1 lakh. How much is the change? It is not percentage change. Change is 30,000 rupees. What is the percentage change in EBT? It is 30,000 divided by 75,000 into 100. And how much it should change? 10 multiplied by 4, that is 40%. So this answer should be 40%. 30 divided by 75 multiplied by, which is 40%. All three answers we have found out. All three answers we have verified that our logical understanding is correct as per the calculation. And we have found out all three answers and we have verified that our answers are correct. Let us go to next question of leverage, which is C 3.20. The capital structure of PS Limited for the year ended 31st March 2020 consisted as following. Equity share capital is there, 10% debenture is there. During the year 1920, sales decreased to 1 lakh units as compared to 1,20,000 units in previous year. Okay. However, the selling price stood at 12 per unit and the variable cost at 8 per unit for both the years. So only number of units have changed. The fixed expenses were rupees 2 lakhs per annum and the income tax rate is 30%. You are required to calculate the following. Degree of financial leverage at 1,20,000 units and 1 lakh units. Please understand, at 1 lakh units and at 1,20,000 units, leverage figure will change. It will not remain same because the contribution changes, EBIT changes, everything changes, the leverage figures will change. Degree of operating leverage at 1 lakh units, 1,20,000 and 1 lakh units. The percentage change in EPS. So we will compare, we will do both simultaneously and then we will compare EPS in both the cases. So 1,20,000 units and 1 lakh units. Let me do this. 1 lakh units, 1,20,000. What will be sales in 1 lakh units? 1 lakh into 12. What is variable cost? 8. Can I write down contribution per unit? Let me do this. 1 lakh into 12 is the 12 lakhs. 1,20,000 into 12 is 14,40,000. Minus variable cost. Variable cost is 8 per unit. So this will be 1 lakh into 8, it is 8 lakhs. 1,20,000 into 8. 9,60,000. I will get answer of contribution which is 4 lakhs. This will be 14,40,000 minus 9,60,000, which is 4,80,000. Minus fixed cost. In both the cases, whether you are selling 1 lakh units or 1,20,000 units, the fixed expenditure is going to remain 2 lakhs. Answer will be of EBIT. Minus interest. Now interest is also going to remain same. Will be 10% on 10 lakhs, that is 1 lakh rupees. Answer of EBT will be 1 lakhs, 1 lakh and 1,80,000. Minus taxation. Taxation is 30%. So I can directly find out earning after tax. This will be 70,000. This will be 1,80,000 into 70%. 1,26,000. Divided by number of shares. I'll get answer of EPS. Number of shares are 10,000. EPS will be 7 and 12.6. All right. Degree of financial leverage and degree of operating leverage in both the cases. If the sales is 1 lakh units, sales is 1 lakh units. Degree of operating leverage will be contribution upon EBIT. 4 lakh divided by 2 lakh is equal to 2. Degree of financial leverage will be EBIT upon EBT. 2 lakh upon 1 lakh is equal to 1. If sales is 1,20,000 units, degree of operating leverage will be 4,80,000 divided by 2,80,000. 4.8 lakhs upon 2.8 lakhs. 4.8 divided by 2.8. 1.71. And the degree of financial leverage will be 2,80,000 divided by 1,80,000. $1.55. Right? So I have found out both this answer. The percentage change in EPS. The EPS has changed from 7 to 12.6. From 7 it has become 12.6, or from 12.6 it has become 7. In previous year I think it was decreased to 1 lakh units as compared to 1,20,000 units in previous year. So in previous year it was 1,20,000 units and EPS was 12.6. Now it has decreased to 7. So it has decreased by 5.6 rupees. EPS has decreased as compared to previous year. Current year rupees 5.6 is decreased, and they also want percentage change in EPS. What will be percentage change in EPS? Will be 5.6 upon 12.6 multiplied by 100. Why? This is answer of previous year. This is answer of current year. 5.6 divided by 12.6 multiplied by 100, which is 44.44%. Alright. What was the degree of combined leverage for previous year? Now, this is not asked in examination, but let me find it out. It is 1.71 multiplied by 1.55, which is a 2.6505. If the sales has decreased by this many percentage, the EPS should decrease by this many percentage. You can verify and your answer will come exactly correct. That is, sales will EPS will decrease by 44.44 percentage. Let us do next question, C 3.21. A company at the following balance sheet as on March 31st, 2019. Fixed asset, current assets, total assets are 400 crores. Equity share capital are 10 crore, worth rupees 10 each. Reserves and surpluses as 15% debentures of 200. The additional information is given as under. Fixed cost per annum is 80 crore. Variable operating cost ratio is 65% of sales. Total asset turnover ratio is 2.5. I will be getting sales from it. Income tax rate is 40%. I can easily find out EPS, operating leverage, financial leverage and combined leverage by just writing profitability statement. My sales. How I will be getting my sales? Total asset turnover ratio, and as we have discussed, it will be sales divided by total asset, which is 2.5. Sales we need to find out. Total asset is 400. This will be 1000 crore rupees. Sales is 1000 rupees in crores minus variable cost 65% is 650. Remaining will be 350, which is contribution minus fixed cost 80 crores. This will be 270, which is EBIT or operating profit, minus interest will be 30 crores, 200 into 15%. This is 240 crores, which will be EBT, minus taxation. I will be getting EAT. Tax rate is of 40%, so after tax will be 60%. 240 into 60% is 144. Number of shares. There are no preference dividend. Number of shares are 10 crores. EPS will be 14.4 rupees. First answer we have got. Operating leverage is contribution upon EBIT. Degree of operating leverage, contribution upon EBIT. Degree of financial leverage, EBIT upon EBT. Degree of combined leverage, contribution upon EBT. 350 divided by 270 will be 1.30. Degree of financial leverage is 270 divided by 240, which is 1.125. Degree of combined leverage is 350 divided by 240, 1.46. All four answers we have found out. Easy question, was a question of RTP. The following summarizes the percentage change in operating income. Operating income is EBIT. And percentage change in revenue. This is sales. And betas of four listed firm. A Limited, they need to find out degree of operating leverage. degree of operating leverage can be found out by percentage change in EBIT upon percentage change in sales. Percentage change in sales is 35%. This is 22%. 22 divided by 35 is 0.63. B Limited, degree of operating leverage, same formula, which is 35% divided by 24%. C Limited, DOL, 26% divided by 29%. And D Limited, DOL is equal to 30 divided by 32%. Answers in all four cases will be 35 divided by 24, which is 1.46. 26 divided by 29, it is 0.90 approximately, and 30 divided by 32, which is 0.9375. What is also asked in question is, use the operating leverage to explain why these firms have different beta. Operating leverage shows you operating risk. Even beta is a measurement of risk. So, different risk, different beta. Operating leverage is not same. So, risk for different company is different. Higher the operating leverage, higher should be the beta. Higher is the risk. So, as the risk of different company is different, beta of different company is different. This is C 3.22. Again, very simple. Last question, C 3.23. The following information is related to YZ Company Limited for the year ended 31st March 2020. Equity shares are there, 12% bond is there. Sales of fixed cost, financial leverage is given, PV ratio is given, and income tax applicable is given. You need to find out operating leverage, combined leverage, and EPS up to 2 decimal. Let me draw profitability statement by sales minus variable cost is contribution minus fixed cost is EBIT minus interest is EBT minus taxes is EAT, number of shares, and I will be getting EPS. Number of shares I am having 5 lakhs, rupees are in lakhs. Number of shares 5 lakhs. Interest I can easily find out, 37 lakh into 12%. 4.44. Sales is given 84 lakhs. Fixed cost excluding interest is 6.96. Financial leverage is 1.49. That is all right. PV ratio is 27.55%. So my contribution will be 84 into 27.55%. It is 2314. 23.14 lakhs. I can get answer of 23.14 minus 6.96. It is 16.18. And so degree of operating leverage should be 23.14 divided by 116.18, which should be 1.43. Okay, financial leverage is given. EBT will be 16.18 minus 4.44 11.74. Understand, as the degree of operating leverage is given, degree of financial leverage is given, there might be some other interest, and this will be EBT. I will deduct taxes, I will be getting EAT. Sir, which interest will be there, that we don't know, but degree of financial leverage is given. If it is matching with our answer, then it is all right. So degree of financial leverage is EBIT upon EBT. We know what is EBIT, right? So degree of financial leverage is 1.49. EBIT is 16.18 divided by EBT. So EBT answer we can get from this figure. 16.18 divided by 1.49. It is the 10.86. So EBT answer is 10.86 for sure, because financial leverage is given. Is this answer 10.46? No, 16.18 minus 4.44 is not 10.86. So what is remaining? It is 0.88, which is additional interest. So EBT is 10.86, tax rate is 40%, so post tax will be 60%. 10.86 multiplied by 60% is 6.516 lakhs divided by 5 lakhs, 1.3032 is earning per share. They also want degree of operating leverage, which can be easily found out by contribution divided by EBIT, which is the 23.14 divided by 16.18. 23.14 divided by 16.18, that is 1.43. And the degree of combined leverage is degree of operating leverage multiplied by degree of financial leverage. Or I can do this, contribution divided by EBT. 23.14 divided by 10.86. 23.14 divided by 10.86, which is 2.13. I have found out all the answers. These are various questions of leverage. All the questions in the chapter of leverage will be easy. Here the only good point was this. Right? Degree of financial leverage was given, and so we need to assume that there is an additional interest, otherwise some will not tally without assuming that there is some additional interest.